Charts on the wall, digital tea leaves reading the pulse. Leverage the silence, the volume is purely results. Support is a floor built on doubt, resistance a ceiling of greed. I'm sowing the delta, a stoic planting the seed. Check the liquidity, keep the spread narrow.
That's a very big gap.
Processing chaos, extracting the ghost from the machine.
The mid-range is here, $166. But I won't be that I won't be sure the price can travel that long. Over here I have 1, 2, 3.
Hedge the emotion. My mind is a fortress of stone. Margin is king when you're sitting upon the wrist.
Bullish candles.
Execution is surgical. Precision.
The mid-range is here.
I enter the volatility zone and I'm never alone. Spread is a gap in the logic, a window for slipping away.
I'm not sure the price can go all the way to June 18 low, but we'll see. So over here the price respected half of this bullish run with a big tail. That tail came above this bear trap candle. A new high could be in the horizon. Depends on how this candle closes. If it candle close above half of this wick, then yes, a new trend could be in the horizon. This was rather than an easy trade.
Charts will wait.
The point of control from this pivot low to this pivot high has shifted there. So I would like to exit one contract. I kept only one contract on. Let's go to order flow. Give me a moment to apply the order flow platform. There we go. Point of control 273 contracts shifted to the highs. Over here we can see CVD or cumulative volume delta is making a new high, but the price is struggling.
Charts on the wall, digital T leaves reading the pulse. Leverage the silence, the volume is purely results.
Now we have that new high.
The floor built on doubt, resistance
Let's extend
greed. I'm sowing the
this point of
delta,
control a bit higher.
a stoic plan in the
On the other hand, I would like to see where is the point of control from yesterday. If I apply this,
candle by candle, the wick is a narrative told. Buying the logic,
it's at $624. The next major resistance area is at 642. How much was that? 621. Wow, way up. So this uptrend can potentially continue. We are in a very good position.
my mind is a fortress of stone.
Cumulative volume delta or volume delta is synced with the price. Price has also made a new high. There we go. Point of control changed here, but the uptrend is resuming. That's very good for our trade. Big success today.
A window for slipping away, hedging the bets that the volatility brings to the day. Blueprints of order inside of a rain denies flow, watching the volume to see where the heavyweights go. Ay. Hold the position, let the market breathe. Calculating risk,
I want to pour some beer for myself. I deserve it. It was a very good day.
the margin high. Underneath the candle, watching the volatility fly. Positions closed, discipline remains. Delta secured, rest now. The charts will wait. Fast because of flow, market moving, gotta keep the timing right. Locked in the zone, yeah, I'm working through the night. Charts are popping, see the data on the screen.
I see more big buy orders are coming to the highs.
I'm sliding on the tick quick, tell me what you pick. When the volume's rising high, never missing with the flick.
Let's check where we are in terms of daily chart.
Of the margin, yeah, I'm dodging every trap. See the resistance.
Maybe to June 18 low can provide resistance. That's where I left my profit level. 50 minutes chart says we have a minor feet right there. That's here. Maybe it's better if I target this portion and be content if it takes that high.
Till you reach the goal. Don't stop with the body and soul. The charts are alive. The data is a pulse, and the market is a dream that we're chasing so bold. Rapid fire, I'm the wire, never losing my touch. Understand the demand, and I'm never wanting too much. Just the precision of it.
the wicks are showing in the market. That's exhaustion. Here is 10 a.m. in the morning. I don't recall if I streamed on Friday. Let me check. Friday was 19.
Detached from the digits, my pulse is a flat line. Let the chaos unfold, I'm just watching the design. No ego in the order, no greed in the hold. Trading the logic, ignoring the gold. Let it breathe, let it move. Nothing left to prove in the groove.
Yep, Friday. I streamed Friday, but I did not stream yesterday.
Master of the throne, sitting alone. Wait for the setup, wait for the sign. Inside
Now eyes are on these chain of bullish candles.
Identity separate. I am not the P&L. A stoic in the fire, refusing to dwell. Let the market scream, let the volume
Half of it
I'm moving in silence, a thief in the night. Surgical
is
engines,
right there.
precision in the touch.
This half is in conjunction with the value area high. Slightly above the value area high. Let's see. If you guys don't have order flow, you can always use the range. This value area high can provide some kind of support for the price.
Wait for the setup, wait for the sign. Inside the chaos, finding the line. The charts will wait. Discipline is the only currency that doesn't fluctuate. Stay still, watch the flow. Everything reveals itself in the silence. Let it breathe, let it move. Nothing left to prove in the groove. Calculated risk, etched later risk, etched in the bone. Master of the throne, sitting alone. Wait for the setup.
The trade begin here. One moment. All right. The trade began here when the price tapped into June 12 gap open. June 12 gap open. That's this price. $677. In the order flow, I notice accumulation is beginning from here. 5 contracts, 10 contracts, 25 micro contracts. So in this company account, I accumulated same as institutions. Eyes are on half of this box. A bullish candle, a chain of bullish candles that represented themselves slightly before and after 10 a.m. We can also measure it from here. Both are allowed. Gives us an approximate. Yep, half is standing tall right there. If this candle closes slightly above half of this wick, we can anticipate the price to go slightly higher. I'm talking about this candle or the next one. That's wonderful. Market is very bullish. It might even go all the way up to the previous day's point of control, which is a range between $506 to $622. That's above 30,000. More wicks. So this wick and this wick, the price failed to close above it. Now there is a high potential for the price to go below and make a new low because we are overextended. The price is a bit tired and it can return to half of this bear trap or this bear trap, or even tap into the low.
There's no hurry in the numbers, no urgency in line, just the geometry of pressure, just the folding of the time. I watch the tick, the viscosity of how the orders move, detached from the result. I don't have a point to prove. It's an acetate. The closer that I look, the more I see. The illusion of the choice is just a shadow in the key. Breathe in the variance, hold the empty space. Trading is a meditation, a steady, measured pace. Not chasing the momentum, just waiting for the bend. Let the sequence start to end, totaling a quiet mental state. The only thing that matters is the discipline to wait. The data is a river, but I'm standing on the bank, refusing to be swept into the hollow of the tank. Precision is a lens when the clutter gets erased. I isolate the signal from the panic that they chased. It's not about the profit, it's about the narrow frame. A microscopic shift.
Okay, it closed higher, but half of this wick, or maybe this one, is what I'm looking for. It closed above half of this portion. We can expect another bullish run from Nasdaq. Just slightly more, 20 seconds to this candle. This is a bull run. This is a bull trap. I'm sorry, this is a bear trap. That is a bull run. And now we have more bear trap in here. If I highlight this bear trap, once the price on this candle close above that bear trap, that's a signal of continuation. Confirmation is the last wick. If it close above it, that's a signal of continuation. If I wasn't in this trade, I would have add one micro or one contract here in the middle or the lower portion, would stop below this and target 1 to 1 or 1 to 1.5. That's my scalping method. On the other hand, I might have avoided this order. For an obvious reason, from order flow, we can see the point of control from this pivot low to this pivot high is shifted here. We have a very thick volume, and this could be phase one of distribution. And it's obvious because we have big sell orders and big buy orders. This bull run occurred from 9:57 all the way to 10:02. I will keep it on the chart. In case of a reversal, I can use the same range to go short if Nasdaq is planning to dip today. We don't know yet. Rather than easy trade, the price came to June 2 gap open. That's this price right here. Tapped into 25% of this daily range here in order flow. It's a textbook that based on delta, bulls are accumulating crazy. Bulls were accumulating like nothing before. Like I said last day, where is it? That's speed of tape. One moment, I should add CVD to the chart. Give me the volume delta. Let's add it. Let's go back. Let's go back to order flow. I tell you that these bulls, they were accumulating crazy at the lows. So remember this price right here, $756. You see the delta is increasing. Accumulation began from here, but that's okay. On trade, we had one more liquidity that was closing this daily gap. We had a daily gap here, very wide. It closed, also went slightly lower to 25% of June 12 range. Back to order flow. The accumulation started as they were selling. They were buying from these sellers. CVD shows that. Once the market opened, one more sweep, and then we had this beautiful rally, which I was in with 32 or 35 micro contracts, close all the way partially up. This trade made my entire next month with $11,000. So on my company, I don't think my company would, the company I'm working for would ask me to work next month after today. I can take a few days off. Now the uptrend is about to end because order flow shows the daily point of control has shifted to the high. This is premium. We are in the premium and we have a ton of orders coming into the market. That cannot be accumulation. Accumulation occurs always in the discount. This is premium. Therefore, we have one liquidity which is available and seen in the 50 minutes time frame. That's this high. Also, the price can respect half of it or 25% of it, meaning I don't need necessarily for the price to go beyond this brown line. I don't have to wait for that. All I have to wait for it is a break of structure and the price maintain position below the point of control. The break of structure to me is a close below half of these bullish candles. If the price closes below half, these buyers will start going underwater. And when they are underwater, what happens? The price tends to go and hunt their stop loss. Could be here, could be here, or maybe here, maybe all the way at the lows. We don't know that yet. But these wicks have failed. We have a close. As I mentioned, we always measure the wicks for continuation. A close above half of any wick, meaning we have a continuation. Now I want to secure my profit for the reason I explained. POC has shifted to the highs. I want to trail because over here that's June 18 low. It's here, June 18 low. It might even go beyond that. I know I am being a bit greedy. I can trail my stop. It should not return in a bull market. I will tell you if after this it wants to continue or it wants to revert. For a reversal, it's not just checking the price only after it takes a high. We have to review what happened even before we have that breakout. So over here, passive sellers are stepping in. You see that? That passive sellers stepping in. The market lost its bullish, what do they call it? It lost its speed, and when it lost this speed, it means, yep, it's getting exhausted. And another clue is to measure, because in the order flow I showed you that the accumulation, when they were selling, they start buying. Half is right here. This is not a coincidence. I won't be surprised. This bullish candle, you see that? This bearish candle, that shows market exhaustion and sellers are stepping in. That's what it tells me. All right.
Breathe in the pattern, keep the rhythm light. The profit is a breeze, but the current has its bite. Watch the drought drown, keep the guardrails high. It's a climb to the summit, not a reason to fly. Trade with the focus, leave the greed in the shade. Precision is foundation.
Now I have 1, 2, 3 bullish candles.
Everything reveals itself in the pause.
There's no,
Trend is a cycle, not a set of laws. Respect the risk.
doesn't
Keep
hurt
the mindset clear. The
to
market-
measure it.
The market is here. Just stay calm.
Because if I want to turn bearish, this half should remain empty.
The lens, the noise is just
If I see a tail or a wick into the half,
the level where
that tells me
become numb.
the bearish,
I count
there might be a bearish leg, but a weak one, which could only result in taking liquidity below this low, $933 or $843. You see that? I didn't want to see that. That tells me it's weak, or it hasn't get to what it wanted to get.
in the shadows, making peace with the sight. Candle by candle, the structure
And I guess this bearish candle
buying the patience.
is half of this wick.
Hold the position, let the market breathe.
No, all of it.
Calculating risk, nothing up the sleeve. Liquidate the ego, keep the margin high. Underneath the candle, watching the volatility fly.
666 contracts, order flow tells us. There we go. 414. We are getting ready to join the short market.
Trade, just reading the flow, watching the delta.
Let's look at Delta. I like to zoom into Delta to compare it with the candlesticks on the chart, because absorptions can be spotted here. Nothing there yet. We gotta wait. So, in a scenario like this, the more the price spends time in here, more I will be bearish. Why? Order flow already demonstrated. A ton of buyers. Look at Delta. Forget the chart. Look at Delta. We already have a ton of buyers. Those buyers have to close their orders, right? Therefore, the price should and must spend time at the highs. If it doesn't, if it dips and goes down with speed, that I would know that bearish leg is not going to last long. It's a temporary bearish leg, but that doesn't mean we're not going to enjoy one bearish leg. All right, my sell is right there at the low of this bullish candle. Stop is at the high of the last bearish candle. As I mentioned, if it's a strong bearish trend, it should spend a little bit more time at the highs for distribution. Okay, that order is active. Still, it did not close half. So we don't have a breakout structure. This is only basic on the daily point of control. This is not a price action trade. This is an order flow trade. POC is here of the day. Let's see if it can provide resistance. TP should be the close of this bullish run, because there could be actually 84, let's $90, $180. That's 1 to 2. Already traded into this candle, should not return. I can move this stop to break even. If I had 2 micro contracts, I would have closed one at the low, because after it takes this low, after it takes the low, it can bounce up again. So here's what I'm going to do. I'm going to close at the lows. Now if it bounces up, I can use this margin or this profit to enter a new short order. If it doesn't take that low, it's going to go higher, make a new high. Let's go to order follow to check and compare the candles. There we go. Now we have some sort of proof. Almost to my stop. Let's watch this trade. And then I will go to order flow to tell you something that I have seen in the market. Okay, that is closed. Let's look to order flow. Delta is bullish. The Delta is bullish. You see that? green delta, red candle. The buyers are absorbed. You see that? That means the buyers are absorbed. Now, I re-entered that position because I saw 93 contract sell orders come to the market right at the highs. Right there, 93 sell contracts. Stop is at the same area. Let's risk $90. Next time, now I don't need to put my profit here. This is a point. The price already neared this low, which is $933. If it wants to go down, it won't stop here because it already did. It would go to where this bullish run initiated, which is this range, these bearish candles. So, same wise, let's target 1 to 2 and not be greedy. Should not stop here. Buy orders came in. Look at the order flow. That's a stop loss. That's a stop loss. So it should not stop here. I can move the stop to break even. This worries me because it tapped into this bullish candle once, 2, 3 times. I don't like that. The first one would have been enough if sellers were determined. Now, this candle, how it will close is very, very important. This candle shall not tap or get close to this red line, which is the close of the first bearish candle. If these two green candles are trap buyers, the price shall not go to this low, which is $599. Now, what I can do is to move my stop here and secure $30 because it shall not get there. It shouldn't get there if it wants to go down. 6 seconds, 3 seconds, 2 seconds to next candle. There you go. We have a fair value gap. Now, 938 is the highest price it should be able to go. Should not close above it. If it doesn't close above it, I can move my profit lower. You see that? It went there. Now I am not interested. Now I want to exit with $73 and be content. This is a weak market. Okay, I closed it at the mean threshold. That's one weak market. I mean, weak in terms of sellers. That's a bearish breakout, and a good bearish breakout is where at least half of a bearish fair value gap is remain open. Did it? It tailed. I don't care about the tail. I said the tail shall not exceed the low of the first bearish candle, even if it's a tail. That tells me it's kind of weak. Is there a low risk entry? Yep. I can add one sell limit. Sell stop is no longer a sell limit. At the low of this candle, right there at the low of this candle, move the stop above the same wick.
Shows you who is driving. The bulls and bears are waking up. The heavyweights arriving. Don't get caught against the tide when the bars are stretched. Don't read the foot from the tape before the heavy hammer fall. Yeah.
It already traded inside that fair value gap. It messed it up. It closed it because it didn't spend much time at the highs. It is spending time in here. Now eyes are on this aggressive candle. We have one aggressive candle in here. That's the half price over there. Stopped on break even. You see that? It's weak. It's weak because of this. Now it's going higher. With this method, checking every candle and how they behave to some certain prices that I demonstrated, you can tell if this is gonna extend, if this is gonna hold or not. Easy peasy. At the POC of the day, I don't need this one, but this is good news. We have a full close below these chain of bearish candles. That's a breakup structure to me. Breakup structure happened. Fine. Very good. Now, if I see the price make a new high, go and make a new high, I see big wicks, a big wick and a sharp decline. I don't have to wait for the breakup structure anymore because I already have it.
Story whispered soft, then shouted out loud. It isn't just the height, it's the depth of the track, showing every hand that's moving to and back. When the volume rises up, it shows you who is driving. When the rhythm gets thick, that's the heavyweights arriving. Don't get caught against the tide when the bars are stretching tall. Respect the hidden weight before the hammer falls. A flat line is a sleeping dog, a pool that's still in gray. But watch the surge when the drivers come to play. It's the footprint on the tape, the truth inside the spread, separating real moves from the noise inside your head. Volume is the master key, it turns the rusted lock, a ticking of the heavy hand upon the market clock. When the volume rises up, it shows you who is driving. When the rhythm gets thick, that's the heavyweights arriving. Don't get caught against the tide when the bars are stretching tall. Respect the hidden weight before the hammer falls. The candle's high, but is the conviction there? Or just a puff of smoke floating in the air? Watch Watch the foundation of the game.
Now maybe I can find a new sell position.
The glass is
Alright.
dim.
Or on this tail, half is where I like to move my stop.
Volume spoke, the truth was told. The trend is clear and right. Close the screen, rest easy.
I would like to enter with 2 micro contracts since I am up by the day with a big portion. Move the stop here and target. Well, I guess it's going without me. Let's see.
Waking up to sunlight, no alarm to pull the cord. Checking on the screen to see exactly what I stored. Phone is lighting up.
I want to target this low and this low. Get off one in here, one in here. I am using 10%, no, even 5% of what I got from these 35 micro contracts, the long positions, which I took at June 12 gap open.
Everything I wanted, sitting right here in the room. No cubicle to wither in, no gray and hollow gloom. The charts are moving steady.
Where's my camera? Okay.
Looking sweet. I'm dancing with the market, moving right onto the beat. No report to finish.
Now this candle did not close below half. Now I'm interested to enter that short order at the close of this candle and move this to the mean threshold. Because the order flow shows over here we have 80 contracts absorption. The delta is negative, the candle is positive. Here the delta is positive, the candle is negative. So we are in a fighting zone. Let's see. Okay, let's cancel this because I want to see the strength.
It's quiet in the morning, the city starts to wake. I'm holding on the profit for my own integrity's sake. No suit, no tie, no corporate heavy chain, just the sun upon the window and the clarity in the brain. Success is not a number.
Same as other trades, I would like to move the stop to break even very fast. It already traded into the close of this candle, should not return if it wants to go lower. That's the trade. Okay, break even.
Neon buzzes low, the whiskey glass is clear. Gotta mind the cost if you wanna stay here. They show you all the flash, but you gotta check the math. The spread is the toll on the trading path. Yeah, the lower the spread, the better the deal. Keeping your edge, razor sharp and real. Watch the commission, keep the overhead down. That's how a smart trader stays in the town. Oh, tight as a whisper, low as the floor.
Order flow shows we have positive delta. That one is absorbed. Now there you go. You had to take me out on break even and then move down. Let's use this tail to go short.
Now CFD streets can be a little bit wide, taking a cut from your long and your short ride. But futures are calling, with a different kind of grace. Tired of the spread in this arena we trace. Low commission making the margin thrive, keeping your hard-earned dollars alive.
When I scalp like this,
Heavy drag on the capital
either I get out on break even or small loss, or I can catch a big run. For day trading, that's the strategy. You guys saw that. Use the gap to trade. And when I'm up, there's no need to risk too many contracts.
keep it in the green. Best numbers that you've ever seen.
I hope this portion can leave empty.
The tape is slowing down, the glass is getting dim, the ledger's balanced out, filled right up to the
We have one low in here.
rest easy now.
Ideal is to close it here, but once it taps into this low, I will move the stop to break even. Maybe I can catch the next one.
I remember when the screen was just a spark in the dark, before the gray started showing, before the leaves in the park started changing their hue. I was reading the view from the first golden tick to the ocean of blue. I don't chase the clock, I'm chasing the
Okay,
flow.
we have that tail.
The morning will sow. It's a language
No
of
need to
motion,
keep
silent decree
the
between
trade
the ticker and the ghost of
with stop loss, stop to break even. We risk $100, so at least we should get 150 bucks from this. That's 150% of the risk.
It's a rhythm in the blood, it's a fire in the palm. When the madness arrives, I'm the eye of the calm. I trade and I trade it cause I love how it breathes. The truth in the pattern, the life in the leaves. Yeah, the market's a partner, a dance in the light. I'm turning the shadows to gold in the night. My passion's the engine, my focus the key. I trade it and I trade it, it's the pulse of the free. The years are a tally, the charts are the lines. I've walked through the valley.
This is a breakaway gap.
Call it the grind, but I call it the art. The way that the numbers pull strings in my heart. It's the surge and the dip, it's the inhale inside. The way the world turns neath the
Okay.
edge of the sky. Why would I leave it? Why would I turn?
Now let's secure
Why would I leave it?
$63.
It's a new way to watch the fires burn. I'm seasoned, I'm steady, I'm deep in the game. The thrill of the hunt isn't never the same. It's the push and the pull, it's the weight of the tide. And I love every moment, I'm held on the ride. It's a rhythm in the blood, it's a fire in the palm. When the madness arrives, I'm the eye of the calm.
Approaching the value area low. That's here. The value area low of this bullish run that can provide support.
Shadows to gold in the night. My passion's the engine, my focus the key. I trade it and I trade it, it's the pulse of the free. They ask for the
Securing $75.
motive is simple, the process is mine. It's the hum of the system, the beauty, the gift. I'm 50 years deep, maybe absent or parted, but here in the movement, I'm perfectly whole. Trade in the spirit, trade in the soul. It's a rhythm in the
Okay,
blood,
closed.
fire in the palm. When the madness arrives, I'm the eye of the calm. I trade and I trade it cause I love how it breathes. The truth in the pattern, the life in the leaves. Yeah, market's a partner, a dance in the light. I'm turning the shadows to gold in the night. My passion's the engine, my focus the key. I trade and I trade, it's the pulse of the free. I trade
All right.
and I trade.
Now let's see if we can join a bull run.
It's who I am. The flow never stops, and I love every single tick. Just watching it unfold. Trade on. Blue light painting shadows on the grain. No morning commute, just the logic in my brain. A glowing high-end desk, the city's waiting slow, while I'm mapping out the places that my digital assets go. Fiber optic veins pulsing under the floor. Bandwidth is the key that unlocks the heavy door. No boss is calling heavy, no report to clock the line. Just a sleek machine in the elevation of my design. All I need is a laptop and a vision in my head. Feeding on
For the bull run, I will wait for the POC to change to the lows. Once that happens, I will be more than happy to target the current high. Up by $12,800 today. That's a record. It doesn't happen that much. If you guys watch my streams, it's usually best case scenario $6,000 or $5,000, and normal days it's a couple of hundred or $1,500 or $1,000. But these buy orders that I participate today, it was a textbook, very obvious ones. Okay, close above the half. That's good. All right. All right. I would like to go long, but volume is not in my favor yet. Therefore, I would rather have a low risk entry. That would be let's see. Where can I have a low risk entry? That's the low of this wick. That's the minimum risk I can take. Stop goes here. All right. Let's see if we get an entry.
A stoic planting the seed. Check the liquidity. Keep the spread narrow and clean. Processing chaos. Extracting the ghost from the machine. Candle by candle. The wick is a narrative told. Buying the logic. I'm selling the noise and the gold.
Okay, that order is active.
Let the market breathe. Calculating risk, nothing up the sleeve. Liquidate the ego, keep the margin high. Underneath the candle, watching the volatility fly. Hedge the emotion. My mind is a fortress of stone. Margin is king when you're sitting upon the risk throne.
Okay, that order is deactive.
Surgical precision is etched in the bone. I enter the
We do have a tiny break of structure here. I can use this box later.
A window for slipping away. Hedging the bets that the volatility brings to the day. Blueprints of order inside of a rain denies flow. Watching
I mentioned in the order flow, we didn't have that POC. POC is still at the highs. That's cool.
Liquidate the ego, keep the margin high. Underneath the candle, watching the volatility fly. Positions closed, discipline remains. Delta secured, rest now.
The S&P 500 is the same, made a new low. Hello, Acropolis. Hi, JJ, an inspiration to see your consistency. How many years took you to get at this level? I had the luxury of working with the team back in 2013. Therefore, for me, it took a year or so because we had a boss. We still have a boss, and we have rules to follow. We cannot just put orders. I did not trade alone. I always traded with the team. Rules were simple. Of course, based on technical, it was our decision. Each person, each staff has its own trading strategy, but they only helped out with the psychology level. For me, it took 1 year, but I guess for an average trader who starts might take 5 years and also losing a lot of money. But if they trade with friends and have a support from the friend, like if I am over trading, my friend should stop me. If my friend is over trading, I should stop him. This way, the progress will be much faster, in my opinion, in my humble opinion. We're getting close to 11. From 11 to 11:30 or 11:15, we might have a leg, so I will wait for that to occur. But Acropolis, did you mean technically or mentally? I mean, you said how many years took me to get to this level, trading wise or psychology wise? Because I gave you the answer for psychology wise.
Support is a floor built on doubt, resistance a ceiling of greed. I'm sowing the delta, a stoic planting the seed.
Look at alligator. 50, 20.
Extracting the ghost from the machine. Candle by candle, the wick is a narrative told. Buying the logic, I'm selling the noise and the gold.
Beforehand, I was trading using Bill Williams indicator, simple indicators. But my mentors, they taught me how to utilize and use these indicators the way you should. Because back then we didn't have order flow. Trading was much simpler. My favorite indicators were always momentum, awesome oscillator, alligator, and stochastics. Yet, till today, they work very fine. The thing I stopped using those indicators was because I couldn't catch the lows. Bill Williams would tell you to sell here. P&L wise. Well, I was doing very good in terms of P&L from 2013 to 2014. I was down by $500 in a trade. I revenged that trade and lost $35,000 that day. Took me 2 years to become break even. Took me 2 years to trade and recover from that $35,000. That would make it 2016. Since 2016, I have been green on almost every month. I never had a red month. When I say green, I mean even 1% or 2% of the account return is enough. Of course, I had multiple accounts. Sometimes I would blow a $2,000 account, but in the $7,000 account, I was positive. I'm talking macro. Generally, every month since 2016, I did not lose money. If I didn't earn, I didn't lose even. Best case scenario, worst case scenario, it was a break even. I did it here on stream. I opened this $300 CFD account, and in that CFD account, I turned it to $1,000 using Bollinger Bands only. It was here on this stream. I guess the journal is available in the journal section of my YouTube. So I do things like that as well. For instance, if I want to trade or have in my personal account, if I want to build liquidity for day trading, I open a small account and scale that small account in 1 month, double it, and once it has enough liquidity, I start day trading. Because the scalping method that I have is not for a long run. In long run, it will completely wipe the account. But short run, it can double or triple an account in a month or two. I have different playbooks, many different playbooks. Almost I'm ready for every market condition. But what worries me is I've heard AI is entering the market for trading, and if it does, AI gives the same signal to me, to you, and to everybody else. I don't know what's going to happen to the price when everybody wants to buy or sell at the same price. That worries me, actually. The market might lose its sense. It did not lose today. Today was very obvious. That's the daily chart on the upper left-hand corner. This blue line is the open of this gap. That's here. This trade made pulled me up by $12,800 today. I accumulated on this institutional account, same as guys in the Wall Street. That's the first low where bulls start to buying. I went 5 contracts long here, same as them. Start buying. I stopped buying because I knew that volume is increasing and sellers are absorbing. So this is the first phase of accumulation. Second phase began here. The big orders show, took out the liquidity below here. Those who trade with stop loss got out, but institutions who can afford bigger stop losses or even no stop losses I accumulated again here. There we go. That's it. 10 micro contracts here. Market opened. I was expecting for a third sweep, which happened here. A ton of buy orders. You see that? Came into the market. That's where I executed the biggest one, which is 25 micro contracts. The last one I closed here with $800. The rest partially made up 12,000, almost 30K, $13,000 for the company in this portion. And I get 3% of that, which is $500 or $600. Now here I'm waiting for something to happen. Maybe the point of control shifts lower. I was short. I called the shorts after it took out this low. But since I am up by the day, mostly got out break even. This one also made the money to lose on this one. Okay, that was my target actually for these sell orders. Okay, came to this portion. Now we should see some kind of acceleration in the process.
Wait for the setup, wait for the sign. Inside the chaos, finding the line. Positions closed. Peace remains. Rest now. The charts are just ink.
Is it gonna make a new low or something? I don't know. Well, yep. Delta shows that buyers are being absorbed again. Therefore, those who have low liquidity, they will be stopped. But these buyers, they won't vanish. They will come to the market again. Those, we see we have aggressive buyers, right? Same that happened here. Aggressive buyers. Some of them got stopped. Some of them got a ton of money. Same scenario is happening here. We have absorption. Bulls are being absorbed. Some people, we have passive sellers and aggressive sellers both in the market. As soon as I see these deltas are getting big, red deltas are getting big, that means aggressive sellers are entering the market. And when aggressive sellers enter the market, that signals some people start to chase the price. And when that chase the price begins, that's when I would like to enter positions. All right, we have another chain of bearish candles. I do have one tiny bullish candle here. If I see a close above it, I can enter long position. And that totally depends on this fair value gap, which is not in a good condition. The price closed below it. I don't like that. So it's weak and it can go lower. We'll see. I can enter one by order here. Risk it below here, 60. Just a 1-to-1. I'm bored, actually. I'm a little bored.
Static screen, the room is cold, the cursor blinking gray. Waiting for the structure.
Moving the stop to break even.
The path today. There's no hurry in the numbers, no urgency.
You're welcome, Acropolis. Stop to break even. Let's see if it's gonna rip higher or wanna play games. It wants to play games.
The viscosity of how the orders move. Detached from
I see orders are small again. Order flow. No more big orders. Let's filter it to weak C. Yeah. No more big orders anymore. The best trade is wait for this POC to go lower, where it can go. Now it's too late. This portion, POC had the chance to do something, and it hasn't done it yet. And here we have some thick volume, but look, here is thicker, here is thicker. So that tells me there's a problem. Let's move this stop to break even one more time. See if it wants to run or wants to play games.
Logic is the architecture, patience is the wall. I'm anchored in the center while the others start to fall. The screen is just
There is an outside candle at the lows. That's some idea. Check the... Yep, bulls are being absorbed viciously. Very, very viciously. So over here we have all these bullish candles, but delta green, candle red, delta green, candle red, showing we have passive sellers and aggressive sellers at the same time. Oh, look at that. The POC of the day, 697 shifted here. That's here in the middle. I want to see aggressive sellers come into the market and see them trapped. If I don't see them trapped, all trades would be like this. Just get out at break even, and at break even. Can I bring my... Where is my camera? Oh, I don't have the camera on this screen. Okay, we can monitor here and learn from order flow. On the other hand, we have a ton of orders in here. This is a fair price area. We can see tails, but these tails doesn't seem to be serious. They seem pushing and pushing and pushing. We must wait for a liquidity run, which we did actually. The price did came below this low at least. It did run one liquidity. Maybe want to run another one. Maybe wants to go at least to the POC. The value area low. This candle is very important. This indecision. Let's look at ES. Doing the same choppy movement. Well, as for the ES, let's measure the point of control from this pivot high to the current price. All right. It says it's here. From this pivot high, it says here. From this pivot high, it says here. This all tells me more bearish trend is on the horizon. And it can go lower, maybe take this low. It already tapped into this fair value gap. Let's have it on the chart. There you go, that's the fair value gap. Actually, trading below that fair value gap is good. If I see close above here, I would like to maybe trade with 5 micro something to go long. What's the time? 11:17. Okay, it's 11:17. Something should happen in 10 to 15 minutes. We already have been here for 06, 17. We have already been here for 10 minutes. The next 10 minutes, something significant should happen. Either a liquidity sweep or a leg. Now I see aggression. That's good. I want to see these sellers to be trapped. There's one low in here. Well, if the price goes all the way to this low, why not this low? So that's why it must return upside in the next 10 minutes if I want to become bullish. Maybe tomorrow, no, not tomorrow, the next day after tomorrow, I trade using Bill Williams' strategy. I can use that strategy to catch trend followings. It's very good, actually. All right, let's see the delta. Do I see aggression? Not yet. Okay. Completely closed below this fair value gap. It's invalidated. The last line of sand is these bearish candles. These bearish candles resulted in this bull run. It already closed below half. That's bad news. It already closed below half. When that happens, my outlook of having a bull run diminishes significantly. If I was seeing big wicks in here, that would be different. But this one tells me, nope, it's not going to do anything good. Execution marks. This one completely inverted it. If I see point of control shifts here, that would be A plus setup. It's at the higher levels. If it was here, big trades were coming here, that would be A plus setup to go long with a very small stop loss, because I know where to leave my stop. This is one of my favorite playbooks. Usually I do this playbook during London session, which is awesome. I would leave one pending order after the price closes above, which one? This indecision candle. See that? I leave one buy order here and then enjoy the ride. I know where to leave my stop. That would be below this. It should not even return back because the buyers in here will defend. As you can see, the price did not go much below the open of this bullish run. The algorithm, they start buying here. If this level doesn't hold, then we won't be having any bullish scenario, which apparently it's not gonna hold. That's very sad because I would love this playbook. All right, let's do that. Let's see. Let's go to the chart because I like this playbook. Maybe we can do something about it. Let's go to trade. Let's go to the account, trade settings, not this one. Change, connect to another broker. One moment, I log into my account. Oh yeah, okay. All right. So, if I see this one closes above it, and that would be also above, I guess, 20 period moving average and 50 period moving average. Honestly, 5 minutes. All right. There we go. The price made a new low, did not make a new low. Momentum did. We have divergence. But guys, oh, the price in here is a bit different. It's these bearish candles. Oh, that's micro. That makes sense. This is micro. This is NQ, original one. Where we are. If it takes this low, that setup is invalid. Let's see. Again, another green delta, another red candle. Not good. Yep, it tapped slightly below it. In a situation like this, if it goes higher, will be an explosive move like this. Because once you see that there is no effort from sellers, but they're pushing the price lower with pending orders. Once passive buyers coming in, that's the key. Once passive buyers coming in and absorb not much of aggression, because there are no aggressive sellers, and then that's when the price can go higher. So this is an opposite scenario of most of the things that we talk about. Over here we have, right now we have passive sellers. I'm sorry, we have aggressive buyers, but we don't have passive buyers. When aggressive buyers would come, exactly when they want, could be below any low. I don't have the heat map to tell me where they would want to join. I don't know. Now we have one hammer candlestick. I mean, it's not that much of an important candlestick anyway. Okay. Let's see if aggression comes into the market. I don't see any passive buyers here. I mean, that's only one tail. But if you guys have enough margin, or you trade with a big account, it's possible to start dollar cost average. It depends on your balance. If you have a big balance, dollar cost average in a situation like this is good. I mean, finally the price would go higher based on aggression that we see in the CVD or cumulative volume delta. But if the account size is small, then don't do it. This is for like big account sizes. It's not for small account sizes. All right, another one. Half of this tail should remain open. Very, very important. Very, very, very important. Half of it should remain open. That there should not close. If it closes, then bulls are screwed. Expected so far. This way I can tell we have aggressive buyers, that's for sure. To know we have passive buyers now active, they left orders, this tail should remain open. It's okay for the next candle to leave another tail. A tail is okay in this scenario, but close is not okay. Still did not close. This could be also like very small scalping opportunities when you enter right there and you leave the stop here. The return is 1 to 4, 1 to 5, because that would be a return. This is also one of my scalping strategies I was talking about, scaling small accounts. So that would be something like this. When your stop is here and your profit is here, that's 1 to 5. And right now, stop goes to break even because it should not get back to mean threshold. We're going to monitor this portion of the chart. If it fails, then we must close for the day. The price can go lower. Since it is in a discount, we won't be having any setup. red delta. Let's see the candle. Okay, red delta candle is green. That's passiveness. That's good. Break of structure still is above this doji. I mean, for conservative entry, after the price close above this, here and the mean threshold are where to enter. We already watched the passive buyers in here together very closely, right? I mentioned half of this wick. So far, it is being respected. If the structure remains like this, we can expect a bullish leg to the upside. But at least we know where is the line of the sand. The line of the sand is here. The POC of that leg is right there. Okay, I guess I can move this stop to break even. Okay, let's see if it's gonna hold or not. Should not return there. Let's go to order flow. Should not return. This portion should remain empty. I'm talking about this portion should remain empty. All right. You have a portion in here, a tiny fair value gap. That one should remain empty and remain open for the price to go at least a little bit higher. Other than that, then it's just bearish, almost to stop. I'm up by the day. I can cover the commission. I don't like that. No. Stop should go here. So I exited 10 contracts there. I exited 10 contracts there. How much? Maybe I exit one here, one in here, and keep the others open. Let's look at order flow. It is above that POC. That's good news. That me see, if I didn't have this tail, that would be way better. Okay, the next partial is done. Now 4 contracts left. Well, I did not like how this tail took out this low. That I did not like, for sure. That sucks. But still, what stands between bulls and bears is this doji candle. We also have a chain of bearish candles in here. We can measure it and see if the price has the guts to close above it. Already wicked into it. That's not good enough for us. We should close above it, maybe go a bit higher. 15 micro contracts. I used this wick tail to enter dollar cost average. Gave me here because I also executed a few more when I saw a jump. Added more. Closed 11 micro contracts. Now we are looking at if the price has the guts to close above that. If it does, that would be a shift in the structure, and I will be positive that the price can go higher. If I wasn't in this trade and the price close above it, like go here, I would use the high of this candle, bearish one, to enter. That would be my pending order. Close firm and then we will be fine. Close firm and then we will be fine. This is a playbook I do during London session. It barely happens during New York session because New York is a wild dog. It's a bad boy. Let's get out one contract because again we are having wicks. I don't see a close there. So let's get out another one here at the mean threshold. That's not a close I wanted to see. I want to see that close to be a bit higher. All right. Two more here. And now I leave the other one just run for itself. Maybe one here. What's this brown line? Perhaps something important. 18, 17, 16 seconds. Let's go to order flow. Point of control of this leg is there. We have thick volume at the lows that can cover our trade. POC of the day is right here, stands tall. That can be very, very annoying while the price reaches there. That's why if I didn't know POC is here, I said this doji is the one stands between the bear and the bull market. Well, failed to stabilize above it, but even this small close gives us a warm welcome. Another bearish chain of bearish candles. Let's see if at least it can hold above half. So far it did here, and it closed above it with a fair value gap. I wanted to see the same scenario here. When I said it closed above half of these bear traps, I didn't want to see a down close candle again. I wanted to see a fair value gap like this. Well, it didn't happen. Well, it didn't happen. It's good that we took partial, and that's why we take partial, because the market is annoying. All right. It's almost 12. The 11:30 leg did not came into play. That playbook, which was according to these bear traps, did not came into play. We see that the price now currently completely closed below these bear traps. But let's see. Why these charts are different? I trade CFD, the chart is different. I trade Nasdaq micro Nasdaq, chart is different. I go to B2 Prime, chart is different. I go to ATAS, chart is different. Anyway, AFI is not being respected, completely closed, took out this low. Nasdaq is down by more than 3% today. All right, let's look at order flow. Now we see aggressive sellers came into the market. That's good news, because let's look at here. When aggression came into the market, that's when the bull start trapping them. Over here, we don't have much of aggression. So shall we still stand here and trade or call a day? I mean, this is tempting, what we have in here. That's tempting. On the other hand, POCs are all the way up here. It's also fast. You see that? Okay, that tail is invalid. We don't need it. This gap is invalid. This one is also invalid. Now we have another chain of bearish candle with speed. So there it is. These are the bears I was talking about. This is large with lots of orders. Let's look at inside the candles. We have buyers also. Yep, a ton of small sell orders. You'll see it's not in our favor. Okay, 186 contracts. How much was that one? 240. I have a tail in here. Same strategy. Scrutinizing every tail to see if we have passive buyers. There you go. Red, Delta, Doji. Passive buyers are here. That's some sort of good news. You have passive buyers there. Okay, full Delta, bullish candle. Looking at half of this wick. Here the price respected it. Now we have one sell-off candle with big delta. If it closed above it, that would be very, very nice. What's this line? Okay, where do you want to go? If you want to go higher, where would you go? These highs are relevantly equal. This would be the last time I'm checking for today. It's getting 12. I'm getting tired. The tail stands. Now let's look at this tail. If it's going to be bullish, then respect this tail. Because I want to find passive buyers before I execute a trade. Every tail is a passive buyer. Because every tail is in a discount. Every wick is in the premium. That's why I like to see big orders coming in to the tail, not to the, see that, like here. Big orders came to into the discount, into the tail. This one came to the high because there is resistance and they want to push the price higher. We still have passive sellers because of these wicks inside this gap. I need to see big orders from the bulls in order to push the price higher. Okay, let's enter one in here. And move the stop slightly lower, maybe the stop. I have a tail. I can move the stop below this tail. Risk $64 because this is one contract. The last order it was 5 contracts. So the last order gave us a few $100s. It's okay to risk $64 here, in my opinion, money management wise.
It's a rhythm in the blood, it's a fire in the palm. When the madness arrives, I'm the eye of the calm. I trade it cause I love how it breathes. The truth in the pattern, the life in the leaves. Yeah, the market's a partner, a dance in the light. I'm turning the shadows to gold in the night. My passion's the engine, my focus the key. I trade
Because here, if I go into order flow,
it's a rhythm in the blood, it's a fire in the palm. When the madness arrives, I'm the eye of the calm. I trade it cause I love how it breathes.
I don't need this bear trap anymore.
Market's a partner, a dance in the light. I'm turning the shadows.
Only this one.
My passion's the engine, my focus the key.
When it happened
And I trade, it's the pulse of the
at 9:30. So, where is 9:30 open? Oh, that's 9:30 open. That's New York open as well. Oh, now it makes sense. This is New York open. So this is, things are getting interesting. Okay, that's June 23 NY open. I have to keep this on the chart. This is important to level. All right, let's get rid of here. Okay, back to, so I see these tails and slightly of absorption right at the today's New York open. Interesting. I'm not gonna move the stop, either take the profit or take the stop. I don't. I was out on but because I took short positions at the highs and because of moving the stop too prematurely. Do you ever do you trade every single day or do you choose somehow? I have to trade every single day because every month I have to meet a threshold. For example, the company gives us a target. The company gives us a 3% target, and to hit that target we have to trade every day. This today was exception. It was easy trade, big win, therefore I can take off a few days. Of course, it depends on me. Or in a situation like this, it doesn't really matter because, oh yeah, it's 23rd, I can take a few days off. But usually if I don't want to risk that much in every trade, I must trade every day. It's not a hard job. It's not a hard job. It's 2 hours, maximum 3 hours a day. I trade during London session. That's where my main trades are placed. Stream during New York session. That's where I trade with the minimum size. I don't like New York session because of its volatility and manipulation. London is much a healthier market. But yeah, usually every day. To my time in Istanbul starts at 10 a.m. daylight saving time. Usually it's 10 a.m. London can take longer, sometimes from 10 a.m. Eastern time 10 a.m. local time all the way to 2 p.m. But if I don't find any setups during London session like today, because today the market start dipping and I did not find any setup during London session, I trade the New York session. Hello FT 2002 AAF. Money management. It depends on how much you have on your balance. For small accounts, it's very hard to do money management because actual return to an account should be 3 to 5%. Let's imagine you have $1,000 in your account. You start with $1,000, right? With $1,000, if you aim for, one moment, I am checking this trade. Very nice, very nice. Look at order flow. POC shifted here. It was right there, very thick at the lows. This should be a good trade. Let's see. Anyway, I was saying, let's say AAF, you have $5,000 in your account, and you professionals, even on Wall Street, that 3 to 5% every month. How much is 5% of $1,000? $50. Can you live off $50? No. So retail risk higher. We need at least a few $100s a month, at least, as a trader, to say, okay, we are having a trade. Let's move the stop here. Let's secure $90. That would be enough. That's why retail usually lose money, because the income is low and the balance is low. That's a very hard thing to do, Mr. A. And the way, and I'm not a good person to give you that advice, because the account that I'm holding has a lot of money. I don't even know how much, because I trade for a company. I don't know how much is their margin. Let's move it, the stop to $120. Let's see if it has the guts to go higher or it's gonna collapse. I'm not a good person to talk about money management for small accounts. I'm sorry. But if you aim for 5%, and you do that for 6 to 12 months, one account, $1,000, 5% return with low risk, and do not below that account in a year, and your drawdown is lower than 10%, then you can apply for a job in a trading company. You can use that as a resume and apply for a job. This is the advice I can give you. All right, let's see if this portion of the chart remains open. If this gap is open, I don't like that wick. That wick shows passive. Sellers, I hate it. If this liquidity void stays open, we can expect higher, but based on what I see here, that's passive. Sellers stepped in, yep, got out on that stop. Any question, guys? Because I want to close the day. Oh, let me explain this trade. Order flow. Look at the thick volumes came at the lows, and I mentioned in the delta that to have a bullish leg, we need aggressive sellers to be trapped. There we go. There's a chain of aggression in the market. Then I saw these tails. I don't have that order book thing, but even if I have, they're usually spoofing the price. So I measure legs, I measure tails to see if there exists passive buyers. Half of that first tail is here, second tail is here, even the first tail. I can see other bodies are respecting it. Once we had some aggression coming to the market, you can see that here. I used the same range area to enter a long order, and the stop was very low. Where was it? Where was my entry? One moment. Let's see the risk to reward. On this down close candle, I got enter somewhere in this gap, I guess. Somewhere here, I guess. And I closed it below, yep, the high of this candle right there. That was 175% of the risk. It was okay, I guess. All right, folks, I hope you loved this stream. If you want to learn order flow and price action, make sure you check other channel, Trade with the Whales, JJ Edwards. Free course. Same thing I'm doing here. Concise, live market. I don't do history. I don't do hindsight. I hate market replay. The old episodes that I make in Trade with the Whales, JJ Edwards, about order flow and other strategies are live market, but you don't have to sit 3 hours or 2 hours to understand 10 minutes concept. Therefore, I suggest you guys check that account as well. Until next stream, which is not tomorrow, the day after, I wish you all the best. Stay safe, stay observant, and always protect your capital with stop loss.